Okay, I'm actually going to do a trade breakdown on Euro NZD that resulted in giving us 14 in profit. So this trade actually is just simple pattern trading. What do I mean by simple pattern trading? It doesn't require all of these many abbreviations on when you be like, okay, what does this mean? What does no? It's just as straightforward as a train moving on its rails. You get. So that's what I'm going to talk about on this video. Euro NZD 14 risk to reward ratio. So stay tuned so you get it. Okay, welcome back. So here is the video on Euro NZD that actually gave 14 in return. So I said I'm going to do a trade breakdown of it. Okay, moving forward, you can see Euro NZD is one of the pairs that I usually like trading. Understand? If I keep going now, you will see multiple trades that I've taken so far in Euro NZD. So this is one of my best pair that I usually trade in Forex. You get, and the price action is usually sweet. Okay, so how did I come about taking this trade? What did I see in the market that made me to take this trade? Okay, first of all, let me take out this position 2. Let me clear everything here. All of these are verifiable in my trading community, so I'll take this one out also. Let me just clear all of this here so you see. So if you've gone through my posts, the posts that I usually make here on X, that's Twitter, my WhatsApp, Facebook, and also TikTok, you see that okay, I'm someone that usually trade pattern, most especially trend line breakout and retest. It has actually been one of the powerful trading tool or concepts that I usually trade when it comes to trading the financial market. Okay, so we can see from here that Euro NZD was actually bullish. Yeah, it was actually bullish. So when I saw this setup, because this was the last trade I took, yeah, this was a 1:5 RR trade, and initially our target was this external range liquidity, but price did not get up to that place. So this trade I closed with maybe like, I think it was around 3 RR that I closed this trade with. So what made me actually put the position size at that place was that was my first take profit level, and the external range liquidity was my final take profit level. So moving forward, if you look at this trade now, you see that okay, here we had a break, meaning our external range liquidity has been cleared. Then moving forward, there was another break here. There's another break here. This was a break of structure, a clean one for that matter. So we have a break of structure here. So before we even got to that place, I actually followed this trade around this area. Yes, I followed this trade around this area, around here. This was where I was following this trade, and if you see, we actually had a break of structure around this place. There was a break of structure here, and a valid level to actually long the market, that's to buy. But one of the reasons that I did not take this trade at first was there was no inducement. I didn't get an inducement on my order block. So this was the other block I had, this one here, this one that I just marked, but there was no inducement and it has already been tagged, so I did not take this trade. So I had to like wait to see if the market will present something, and it did, because we had a break of structure here. And let me move to 4 hours to see. So under 4 hours we have this break of structure here, general break of structure, because the trend was actually bullish. So I wanted to say order block. So we had this order block here. We had this other block very close to the initial one that pumped the market. So we had this other block, and we had an inducement. When I saw this and this setup, when it was forming, I was just waiting for an inducement close to my point of interest, and it happened to be around this place. This was the inducement I initially planned using. So if you see, the market actually came down, cleared that liquidity, but did not tag me at first. If you look, it did not tag at first. Then it went up. Then later came back to clear the engineer liquidity it created, which was this one. Alright. So after I saw this inducement right here, I was like, okay, this is an A+ setup. Why? Because we had a break of structure that is following a bullish trend. You understand? The market is actually bullish. So it's very simple and straightforward. We had a break, meaning this level right here, this level here becomes our protected level. All of this level here now, they are our protected level. These are protected level up to this point, right? Up to this point. Then this will be our target level. Our target level, or and take profit level, or external range liquidity. You get? So this was what I saw after that inducement was created. So what did I now do? I just went to my order tool and look for where to get my invalidation level, because I cannot actually hold all of these points to be my stop loss. So I needed to get an invalidation level just below where I entered from, around this area. I think that was what I did, around this area. So that was my invalidation level, and my target was straightforward, external range liquidity. Since we have our protected level, so this becomes our target level for take profit. So I used my long position to get my entry fixed. Then this was my target level for profit. Then this was my stop loss area. So since this is 4 hours, looking at going down to lower time frame, we have this 1 hour. If you look at it clearly, we have we have a trend, a fractal trend. You understand? We have a fractal trend right here. We have general trend and fractal trend. So this is another trend line. This is a fractal trend line. You understand? A very clean descending rectangle for those of us that trade chart patterns. So this is a rectangular pattern, a descending rectangle or descending channel. You get? I'm saying rectangle, descending channel, because normally if we are to close it becomes a rectangle. So a descending channel pattern. So here, after we have that, I now saw a break of structure around this place. This was a break of structure, and we had our entry around here. This was our entry position. And this becomes our invalidation level for our second entry. You get? This was the invalidation level, and the target was the same. We had to take out our external range liquidity. So that was the target, to take out our external range liquidity to create what? A new high. You get? So I just brought out my long position to here. Then I placed it here. Still the same target area with new invalidation point just here. You get? So that was how I got my 14-hour risk to reward ratio in Euro NZD. Yet it might be a little tangled up, but this was how I did everything from my general trend going down to lower time frame to see if I can get a proper, not a proper, but a second entry. You understand? So this was the trade that gave 14 RR in return. So like, follow, and retweet for others to see, or repost for others to see. So thank you.